Hello everyone. Good afternoon, good evening. Probably not good morning, depends on where you are. Actually, if you're watching this later, good morning, whatever. I hope you're all doing well. And we got another video I wanted to stream with you guys today here on YouTube. And it's a pretty important one because I want to talk about levels and trade levels based on order flow. So order flow is something that has been tossed around a lot, but not as much as trade levels, support, resistance, so on and so forth. A lot of people identify trade levels in specific different ways, right? I've made videos about it, basing it off volume, and we can add another layer to that if we talk about order flow. So levels, right? Levels. You probably see it all over social media, especially X or Twitter. Very infamously, right? A lot of people flexing levels, the level flexors, identifying areas where price, you just throw a level support resistance, and if price bounces off it, they go, okay, look what happened, right? At XYZ. Very nice. However, right, there's a way to take that a step further and actually identify levels that have directional basis, bias, and opportunity throughout that. Rather than being like, okay, boom, support resistance based on price action, it bounces off, you're like, oh my god, I'm a magician, right? We can take volume and add order flow to that. Well, I guess they're kind of similar, but we can take order flow and add it to the already cemented idea of levels and create directional expectations, not only right in real time, but from days in advance. So I'm going to show you guys multiple different examples and explain how it works, where you can have ideas of levels trying to buy them or sell them, right, with before the move even actually happens. And that's going to be based on order flow, based on volume, and all that put together to help you with that directional bias in these areas. So like I said, the point of levels isn't necessarily to scatter them, or trade levels isn't to scatter them around and say, all right, let's see kind of what happens. I know I'm not saying that that's incorrect. I'm just saying that it seems like a waste of energy and time. If I just start drawing all these support resistance levels willy-nilly everywhere, and I just sit in front of the computer without the general context of the market and say, okay, like, let's see what happens here. I think it's a waste. Realistically, that's like level one of trading, right? When you find your support resistance levels and you want to see how price reacts, and there's nothing wrong with that, right? It's fine if you're at that stage. But if you want to excel and develop that and bring that to the next level, I want to show you a way that you can have a good understanding of what the level actually represents and where it comes from in a few basic forms, but also understand what the direction of this level is, right? And what that level can actually bring in terms of directionality. Yes, right? You can increase the probability of understanding where the move is to come from based on a level. So for those that are joining in right now, hello, welcome everyone. I hope you're doing well. And today we're going to be breaking down how to solidify trade levels with order flow that help you with directional bias and whatnot. So there's realistically a lot we can say about that. You take a look at our TRADEPRO Academy Twitter, right? If you're in Discord or whatever, realistically, you can identify where these areas are and what's going on from there. Like you can see today, realistically, I wanted to see if we can get some shallow pullbacks on the ES around 0406 for the longs, on the Nasdaq around that 630, 640, right? That bring a directional bias to the upside. There's a lot of different things. Where was it? There's a lot of them, realistically. Right? You can scour wherever we post them in advance, but that's not the point. I want to show you why those areas can be created, or why those areas can be found, how they can be found, and what's going on from there. So today I had around 04 as a key area to look for the buy side. Right, this was preemptively done in advance. Why that area? What's going on here? First of all, there's volume. Right, there's a lot of these different things, but one of the main ways to look at it from a directional perspective is the inclusion of delta. When we talk about delta's the difference between market buyers and market sellers, realistically. When we have areas of very heavy delta on the buy side or the sell side, they show us imbalances of price directionality. those imbalances of buyers and sellers can help you understand if traders are trapped or if traders are trying to catch a bid or whatever it is. So here's NASDAQ from today, right, with this delta chart. When we look at NASDAQ for today, we can look at the overnight session. This is the overnight session right here, right? This whole block over here is the overnight session. You can see we have a TPO chart. We have a volume profile chart. Within that volume profile chart, we have delta. So delta is the market buy side minus the market sell side. What do we have that's interesting at this high? At the high of the overnight session around 695 area, we have this massive, massive extended delta that shapes up over here. So this massive extended delta that shapes up, that actually pushes price away from it, pulls prices down, is telling us that there's a lot of congestion here at this high, that these guys are looking a little trapped. So when these guys are looking a little trapped in these scenarios, this creates the opportunity that we have some kind of major form of resistance at that area. So I can say in and around this area, realistically, I'm expecting to see these guys fail. Now this is a pretty big ask at an all-time high. Trying to fade an all-time high and sell an all-time high could be cataclysmic, realistically, right? You could get a very, very large spanking. However, when you have order flow like this, it starts to increase the probability that you can actually see some kind of directional bias at a key area preemptively. So if I have this massive buyer that sticks out, prices rotate away to the downside from that area, right, on the pre-market session, I know in and around this block, right, with a slight room for error, realistically what I'm going to see is the opportunity for that big sell side to come out where these guys get trapped. So on the day session itself, they get trapped a bit higher, closer to that 700 here on the NASDAQ, and we get a very, very significant push to the downside, right? Look, we trade 700 or so, they get super trapped right around that 695 area, just a few points away, and now look where we're trading, right? We traded as low as about 550-ish, right? We can call it 550, whatever, it's not that big of a deal. 550 from about 700. Right? Do the math, that's 150 points. That's a $3,000 move on one singular contract. So preemptively, even before this market opened, we have a very good understanding of where these massive rejections could be. You can look at it on the S&P. You can look at anything realistically in these futures markets. You can look at it on the S&P and you can identify where these big solidified areas are. I love this delta. I love these as order flow areas, and when we combine them with the volume profile and the ledges that we've talked about countlessly, you can get a very, very good identification of where a key trade level is. So the larger the extension, right, the larger the imbalance. The larger the cluster, especially into a key area at a volume profile ledge or at an extreme, the more you have chance of a support resistance area to give you the indication that you're most likely going to see some kind of buy side step in. So if I combine this on NASDAQ, right, and I look at the volume along with the delta, I can not only understand where there's going to be a massive expected rejection, but if I'm looking at this, we're at all-time highs. I would theoretically want to be long in this scenario, but where can I get long? We have a nice ledge that's somewhere around 600 area. But if we're trading 100 points higher, that seems like a pretty deep pullback for me to get in. So I look at volume that gets very thick, that's not at the point of control. So the next area, you got some single prints here, 630, 640, right? This is a key area. If I go over to the delta and I look at that block, you have this huge, huge extension on the NASDAQ of this market buyer that sits over here, right, from the overnight session. So into this block, we have heavy volume, single prints, plus these guys. You get a combination of very nice confluence that you have a nice little buy direction for the long side, right? As the day shapes up right at that level, you can see the extension of clustering of sell delta getting people trapped. So that creates a long opportunity. As you have it, right, NASDAQ from that area created a very, very nice bounce if we break down into this 630 area, right? You come down into it, some decent order flow, and you get this very extended bounce, right? So that's what I like about this. You can look at this on the S&P 500 as well. If I can find that chart, we can get some information, because when you get these areas, even days in advance, and you're now trading those regions, they give you a very good understanding of order flow pivots, of levels, right? You get very aggressively long above, you have very aggressively short below, right? And with that, you can get directional bias to help you with the already broken down analysis. So I think, where is it? So I'm just looking for this chart. I think this might be it. So if I look at the S&P, very similar thought process over here, right? With the volume profile and these delta bars. If I look at a time in the past, right? One of the most important areas that we've traded for the last bit has come from this mid 20, higher 20 area, right? It all came from one of these days where we got a very nice extension. You can see there's a lot of negative delta buildup that were above, and this whole volume block, it's a nice big distribution, right? A thick auction over here. The bottom band of it is around this mid to high 20. So that becomes a very important pivot for us. As long as we can hold above, realistically, buyers are in. If we can hold below, sellers are in. So as we continue over the next few days, you can see here, okay, we line this up. We're below the level. Huge positive delta gets trapped. Price drops very, very aggressively. We come back into the area, and lo and behold, we get the clustering of all of this delta again, presenting us some kind of pivot area, right? And this gets used time and time again until eventually we get this leg up. It's the same situation here if you take a look at what had happened even before the Fed. Before the Federal Reserve meeting minutes, right, we get some very important data to help us understand how the market's kind of positioned leading into this. So when we get this is Tuesday. Tuesday during the day session, we get this move up. And at the top of the move, we get very interesting imbalances of delta that shapes up. So if we compare this to the volume profile chart over here, right? And this is the day. So if we compare to the volume profile chart, okay, obviously what we have here is the start of the incomplete auction, right? So where volume gets very, very thick at these lows, it creates a nice little extreme of support if we're above it, realistically. We want to stay above this area. We don't want to complete any of this. You have very heavy volume into the lows. They got very aggressively stuck into that low pre-market, right? Very nice buying here. Super stuck into the low right off that area. You can see how thick that negative delta is. Very, very heavy volume. This is what helps us swing to the upside. We run up. We have a very nice delta at that same area, mid-20s from before, that is holding our support structure. So as long as we can hold above this area, as long as we can hold above these clusters, we're realistically wanting to go to the upside. Overnight, at that same region, right, you get a very nice clustering of all this negative delta asking for support structure there. During the day session, same thing. So you've built out areas that have heavy imbalances in and around this lower 30 that are expecting prices to sustain to the upside. As long as there's big sellers below you, right, and there's a big clustering of those big sellers constantly trying to sell, and every reaction is to the upside, you have your indication that you can springboard to the upside above that level and sustain the directional bias higher. So you want to buy into those areas realistically. So these were a lot of examples of how I like to use this, but there's more to it, right? When we talk about order flow in terms of auctions, right, and identifying levels, I think when we look at the order flow perspective, obviously the DOM for me with futures is going to be the number one tool that I use to identify where big market sellers and buyers are. I understand it's a fairly difficult tool to comprehend, especially at the beginning with all these numbers flashing in front of you. So seeing something stationary like delta helps out a lot, right? So order flow, right, is market buying and selling activity that enters and it creates moves. It creates imbalances in buying, it creates imbalances in selling, that create directional moves. If we understand that markets generally move from auction in terms of auctions from balances to imbalances to balances to imbalances, these imbalanced moves that are created by order flow suggest that there are heavier buyers than sellers or heavier sellers than buyers that actually create these expansionary moves. So we can find those and actually put them into a visual context like the delta that we see here, and we can add it into the volume. We create something that allows us to identify not only a level to trade at, right, solidify it, but also some kind of direction that comes from that area. So you have an overall matrix of all this order flow, and you can have excessively strong buyers and sellers that move price, or you can have traders that are trapped and stuck into highs or lows that create reversals. These are generally more so generalizations, but it's a foundation of the whole movement. If we can visualize where these traders are imbalanced and we can create direction, we can turn this into a trade level with some kind of directional bias. So, for example, right, we have an area where we have a lot of sellers that are coming in, and we start to run under, right? So this isn't, let's see, currently we don't have any of that. So let's say we have an area where we have a lot of sellers, right, and we cannot run under, right? The issue is they keep getting absorbed, trapped into these key areas, right? And you get springboards up, and you keep opening above those prices. You can generally assume that these guys are super trapped, and you have the expected movement to the upside, just like the Nasdaq's expected movement to the downside even before the market opened. So when we talk about this, and from an order flow perspective, there are three general charts slash piece of information that we can extract this data from. Number one is the DOM, right? Number two, you can look at delta profiles or the DOM delta. Number three, you can look at the footprint. Now, from the visual perspective, the footprint, you got to look too much back in time. I like, from the delta perspective, a chart that just visualizes all these deltas like this. I think the DOM is very, very important as well, because you can see where big market buyers and big market sellers actually enter price, and that can build something up. But you can also have these large volume trade orders that come in on your chart that can help you with those visuals from the DOM, right? And generally they do help stack up with these large deltas as well. So honestly, all these three aspects are generally going to tell you the same thing, right? In different ways. And as long as you can have some kind of visualization from it, you can extract some kind of visual component of it, you're most likely going to see it as it should be seen. So the main thing I'm after here is finding imbalanced moves, or imbalanced areas, I should say, that have created a move, right? Whether it's immediately in the past or whether it's at some point in the past. Because you have the expectation that that move is going to be created again, right? So if I look at this currently, what we have in the right now situations, we have some kind of extended larger deltas into these lows that have been created on the current market day. From a DOM perspective, right, I can see around the O2 there's some larger orders that sold with some reactive orders that bought. These guys are getting a little trapped around 53.02, and you start noticing this by this larger delta. If I look at the prior overnight session, I can see that this clustering of imbalances started around 02 up to about 05. So that blockade for me is going to be a strong potential area to see these buyers try and push prices up. If I use this as like a pivot and as a barrier, I have these larger orders that came into the close yesterday around that 95. So these guys, if they start actually accepting under that 95, we can start looking for a move, specifically under these like 90s here. We can start looking for a move down into this 72. 72, 73, 74 from yesterday's momentum move. That represented such an aggressive rally based on traders getting trapped into that low. I'm expecting, honestly, even if we pull back into this by tomorrow, I'm expecting some kind of bounce from that area. So I would like to see longs kind of enter that area realistically. So I can solidify where these prior reactive orders have come into this by just looking at these delta readings, by understanding where the volume sits as well from an auction perspective, and looking for those moves. So I'm not saying we can call tops like right before they happen. I would still need to see someone trade into that area to identify that they're actually getting trapped, so we can look for that reoffer. It's exactly what I showed you in regards to the Nasdaq, right? Where all those buyers had accumulated before the market even opened, expecting to see that that could be a top for the day, for the move, realistically. So the general notion is to identify where there's really heavy delta clustered together that creates some kind of reactionary move, and we can follow that from the delta matrix realistically. You have very solidified extensive absorption at lows, right? Massive market sellers at lows, for example. If you're above that, realistically, you want to see that upside momentum continue. You start moving back below that, they're no longer trapped, and you get a very large pull down. So when I'm looking at this, when I see these areas of imbalance, If we start actually running back under this mid 90 on the S&P, I'm honestly expecting a kind of swifter 20-point move to the downside, right? And I think that gets bought up. If for some reason we start running under this 70, right, I expect another 10-15 point move that's a little more excessive to the downside to clean up the low volume auction that was presented in that area. So you can look at the DOM, you can look at similar things here. They're a bit more muddled and clustered, especially with the market orders that come in here, right? Obviously, there's a lot of reaction that goes on, and maybe you miss one of the big reactions that creates these larger moves. So seeing it from a delta perspective and a volume perspective can kind of help you slow it down and visualize it a little better, realistically, right? If I look at these volume profiles with all these colors, these TPOs, I get a very good understanding of where heavy volume lies, right? At whether it's at an extreme high or an extreme low, and where that wants to hold as support. If I'm looking for a support region, right, I can see there's very heavy volume in and around this value area low from the overnight session, right around that IB high. So around 53.0204, where we'd want to see prices actually rebound from that area. And they've rebounded a few times now, right? They've held that bid up into that 12. They're trying to hold it again. So there's still some kind of attempted bullishness into these highs from that area where you can see this volume and these imbalances stack up. So when you want to identify trade levels, right, I think level one, where a lot of people might be starting, is going to be finding support resistances based on price action, right? When you get to the next level in understanding levels and direction and auction, you start looking at volume profiles, you start looking at market profiles, and you can identify levels from there. Where's heavy volume? Where does volume thin out? Where's the IB high, IB low? Where's the single print, right? So you can develop the understanding from that. And then, right, you start looking at order flow, you look at delta, you look at where big market buyers and sellers have previously traded, where they've traded from the overnight, where they've traded from that current session. And those help you solidify that the areas you found from profiles, right, have some kind of directional bias to them, right? And you can use those as pivots. You can use those as key longs, key shorts to kind of help you really, really understand what this level actually means. So with that, right, I think that you can have a better perspective on the trade itself, right, and the idea of the trade and the directional bias and the context of the whole market when you start stacking these things together. So I just blabbed for about 20 minutes on this. I hope that you got a better perspective of trade levels, how they're used, and how you can actually create some kind of directional bias from them using order flow, using delta, using these specific things. So if you have any questions, right, please let me know. I see some questions here in the chat. My main issue with using delta is, one, can never know if it's real directional interest or trap traders getting out. When it was created, has it been, can't see that word fully, something already. Well, like, when traders start thinking, like, are traders getting in or getting out of positions? Why did this move happen? Blah, 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 blah. I think it's a waste of energy and thoughts trying to zero in on that, right? It doesn't necessarily matter. If you see the order flow coming and you trade that order flow, right, you want to lean on the areas that have heavy volume. You want to lean on areas that have all this, like, clustering of traders getting absorbed and whatnot, right? If it created a move from before, there's most likely going to be some kind of reactivity that tries that move again. That's my thought process on it. I don't want to keep it fairly simplified. If I start overthinking of, like, who's getting in, how are they getting in, how are they getting out, right, I'm never going to take a trade, honestly. It's just going to be analysis paralysis at that point. I've seen it work, and there's a constant flow of success through it. So realistically, it's what I lean on. Let me know if you guys have any other questions pertaining to this. You guys do one-on-one consultations. What do you mean by that? But yeah, like, if you want to ask me a few questions, you can check us out on Discord, honestly. If you hit up community.tradeproacademy.com, it'll send you to our Discord, and you can just hit me up on Discord there, ask me a few questions and whatnot, and we can take a chat. Um, Try to find the real me. But yeah, I post there every morning. You'll be able to find me. Do you need an initial move out of an area to confirm absorption, or do trades the extremes right away? When I see absorption, right, I'm not necessarily waiting for the exaggerated move from that area. Um, so like for example, you see, let's say you see a bunch of people just like selling constantly, constantly, constantly. What's a good example of that actually? Yesterday, right? Yesterday, if we see a bunch of people selling aggressively into these lows, right? Where is it? Like this is the day session itself. From the overnight, they sold a lot into it. From the day session, they sold a lot into it. When I see a bunch of people just selling into these lows off the open, sorry, where's the open? If I see a bunch of people selling into these lows off the open, honestly, I'm going to try my shot buying into it. I don't need to see this reaction pump up and then pull down, get me in, and then continue the move. I don't mind when they come in. If there's some kind of reaction against them, I'd like to be on that side. For example, right now on this DOM, right, what we're seeing is at 06, you have like 1600 on the market buy side that came in at a span of about 3 seconds that have created a 3000 positive delta, very heavy volume down into this area. Realistically, when I see something like this building up here, if I get a few more pumps to the upside, right, I'd like to be long with those guys. If they're going to be that aggressively long, if we can just swing this up and they keep buying into these areas like this super aggressively, that makes up for a decent long opportunity at that point. But you need to see at least some kind of reaction. I don't want to see them come in like, boom, 1,000 hit the market, and I start buying frantically with them. The order flow is about reactivity. It's about the reactions of these traders. If no one reacts to someone buying this excessively, like, look, there's an offer on this. I don't want to be on that long side, right? I don't want to be on that long side. For me, it makes more sense if a seller's stuck into a low and they try to reactively bid for me to get long on that move. It's also the end of the day, so that probably makes a lot more sense as to why these massive orders are coming in. How does one confirm a trade into the area? One of the best confirmations for me, realistically, is how the order flow shapes up. Like in this situation, you see a big market buyer come in here, but they can't hold a bid at all, right? People are just selling into it. I don't want to buy that, right? I generally confirm with the order flow as it comes in. You can confirm with delta as well. I don't like to just like confirm on price action. If I see these guys like rotate a bunch, for me that doesn't mean okay, buy it, right? Is based on the imbalances of order flow, whether it's on a DOM, whether it's on a footprint, they can all help. Thank you, Laura. I appreciate that. Thanks for coming around and watching this. And if you guys do have any questions, right, I'm going to wrap it up here. Any more questions, hit me up. Hit up TradeProAcademy.com. Hit me up on Discord. Check out community.TradeProAcademy.com, and we can chat there on Discord. And I'll see you guys tomorrow. Tomorrow morning, I'm going to be streaming live in the morning. We're going to be opening up our trading room, so I'll see you there. Generally, Fridays we do it if I'm not away. We missed it last Friday, but we'll be back this coming Friday, tomorrow. So check those out, and we'll try to do these live streams on topics more often. If there's something that you guys wanted to know, just drop a comment. We can do a live stream on specific topics, and that can help a lot of people out. So let me know. If you have any questions, you know where to find me, and we'll chat soon. Thank you, everyone. Thanks to everyone that came out. Enjoy the evening. Enjoy the day. Enjoy the weekend.